Alright, so we're live now. I'm still waiting for everybody to come in. Alright, everybody, welcome. If you can hear me, you can just indicate in the group that you can hear me in the WhatsApp group. Okay. I'm still waiting for everybody to join. So I'm still keeping my chat this way. So I'll clean it up and we'll start a fresh analysis together. Alright, thank you, erudite trader. Let me share the link to the group for those that are having issues to join. You just send the link to them. Right, so I was still waiting for everybody to join. So this US100 right here, it's a symbol for Nasdaq too, right? Nasdaq, you always find an easy representation of it as NQ. NQ. That's the easy representation of it online, right? So today we'll be discussing about a whole lot and some easy techniques to go around trading the Nasdaq. And I'll also talk about what I'm anticipating in the closest future, what I want to see the price of Nasdaq, that's US100 do. So I'm still trying to post the link for everybody to join. So wait for them to come in. And one of the things we'll be also doing tonight is if you have any forex instrument you want me to analyze, I'll do it for you. Just drop it in the comments. I'll be watching. If you have any forex instrument you are looking at and you want my thoughts on that, you want to have my take on that, my bias, you can drop it on the comment section. I'm going to answer you and we'll do it here live so you see why I'm looking at it the way I'm looking at it, right? So I think we're having a good number coming now. So let's come in our numbers. So while we are waiting for others to join, let me clear some of these stuffs in the chat here, right? So let's delete everything, delete all 60 drawings. and let's have this full screen. So this is the daily time frame, right? Welcome TRX New Gem. Hi. Alright, so this one I'm looking at for the Nasdaq. So for those of you that have been with me for a while now, you know I trade mostly with fair value gaps, right? So fair value gaps are literally my unique support and resistance. I see them as institutional level, which by whereby price will always respect and will hold firm to price. So this the Nasdaq this is a bullish fair value gap for me. So I annotate this the daily bullish fair value gap. So you follow through. We'll also study old price data, what price did previously um to the prior to Friday and the past few days. So this from the daily time frame. So let's have it annotated as 1D FVG. So this is a bullish fair value gap right here. So just right here, let's focus on this area here, right? Let's focus on this area here. We have a bullish fair value gap here, which you've seen price held to it. And for those of you that have been having issues with knowing the fair value gap that would hold, any gap you see on the chart that has week to week, it's always best you consider it. You don't try to guess work which fair value gap would hold. So you watch the reaction you're going to get towards that, right? And that's how you determine which fair value gap you're going to use. So right here, you see this is a bullish fair value gap. If you wait for it for price to come down right here, and if this does not hold, if this bullish fair value gap does not want to hold, you will see candlestick start closing below. This is for the bullish fair value gap. If a bullish fair value gap does not want to hold, you see price candlestick trades below it and close below it, and you also see the body of the candlesticks below it, just as in this case here. So it is best when once you see a gap, you consider it. So for I can also consider these two as my bullish fair value gaps here. Can consider this as my bullish fair value gap. This is my daily bullish fair value gap too. So every gap is very important. You don't know what price is going to do at those particular gap. You can only know that either of the gap is going to react bullish if it's a bearish, if it's a bullish fair value gap, and it's going to react bearish if it's a bearish fair value gap. So in this point, I consider, because we've seen this kind of reaction right here. This was on Thursday that rejected of this bullish fair value gap. That's a give some reaction, reacted of this bullish fair value gap to the upside, creating this bullish candlestick. And you see how it traded to this bullish fair value gap here that is now looking like an inversion fair value gap. It traded to that, right? And that is well expected, because when you have price close to the downside disrespecting a bullish fair value gap, you expect to see that act as inversion. So this can literally become our inversion fair value gap, right? And now every swing point as hold on please, I'm coming, let me check something. Alright, so I'm back. So as I was saying, every swing point we look at that as liquidity. So this swing high here, we consider that liquidity. So we have two kinds of liquidity, right? We have the buy side liquidity and we have the sell side liquidity. So since this is a swing that price made a significant turnaround, we consider that liquidity. So now, because this is a high here, this is a high here, because this is a high right here, so this becomes a buy side liquidity. So someone is saying, boss, please teach the CRT. I would really appreciate. So I'll explain something about the CRT that you really need to understand, right? See, there's no difference. This CRT, for those of you that are new here, that are asking, that might not know what CRT is. The CRT is an abbreviation for candle range theory, and is a concept from one guy on Twitter, right? One guy on Twitter. There's no difference between CRT and liquidities. There's no difference between CRT and also turtle soup. So the idea is that once a low is taken out, you expect a reversal, and once a high is also taken out, you expect a reversal too. We are getting to that, right? We are getting to that, but we need to take things in context. We are literally going to do this for a very long time throughout the weekend, okay, weekends, and we'll also be doing live trading during the weekdays. So it will really be a long journey, a long journey that will really add a whole lot to our trading um, library. Right, I'm getting in questions. Matthew, please, what time frame are you using for this analysis? Okay, the time frame I'm using for this analysis is the daily time frame. I want to go from the daily time frame to the lower time frame, and as this is weekend, this is going to be static price action, right? This is going to be static price action. So I'm using the daily time frame for this analysis. Okay, so um once we have, let's get back to the topic of the day. So once we have that this bullish fair value gap here has been disrespected, and we have candlestick close below it, so we can have that bullish fair value gap to act as an inversion fair value gap. So it wouldn't be wrong, if we label this an inversion fair value gap. So let's call our inversion fair value gap IFVG. So for those of you that are saying ICT stuffs is really complex, it's not really complex as you see it. These fair value gaps now is as simple as how you look at your support and resistance. So these fair value gaps are likely always going to be used as support to price or resistance to price. So in the case of a bearish fair value gap, it is always going to be used as resistance to price or support to price. So whenever you see a fair value gap, bullish or bearish, that should really be your something you should consider. It should be something you should consider. So now at this point we have a buy side liquidity resting just above here. So remember I said that literally buy side liquidity or sell side liquidity, they are just swing points. So this is a buy side liquidity here, this swing point here too, this is a buy side liquidity, this swing point, that's a buy side liquidity, this swing point here too is a buy side liquidity. That are literally turning points. There is no complex stuff right here. ICT stuffs are not complex, and CRT is just a duplicate of ICT stuff. If you really understand ICT's concept in depthly, you would see no difference from what CRT is doing. And literally CRT, that's a candle range theory, is literally an application of the 2022 model ICT belt even before the CRT came out. It's an application of that because you're just marking a low and a high, then you go to your lower time frame, probably the 15 minutes, to look for entry. Just that the difference between CRT's theory and ICT's 2022 mentorship is that ICT execution is at the lower time frame, which is a 1 minute, 5 minutes, and 15 minutes. No, 15 minutes. Yeah, 15 minutes, because price is always going to what price does in the 1 minute time frame, it's always going to look similar to in the higher time frame too. So now we have this inversion fair value gap. All right, we have this inversion fair value gap, and you know why this is an inversion fair value gap. I've already explained that. So, and we have this bullish fair value gap here. So why we mark this as an inversion fair value gap is because price has broken below that. Now, can we consider this a sell side liquidity? Yes, of course, because this is a swing. This is a point that price turned around right to this fair value gap. Now let's go to the 4 hours time frame. So now, for those of you that don't know how to do top down analysis, this is your opportunity to learn too. So I'll really be pouring out a whole lot of insight. And if you have any question, you can drop it in the comment section. I'm going to answer them as we are going. I'm going to answer every question if time permits. If time permits, I'm answering every question. So let's go to the 4 hours time frame. So now you remember this level here, this IFVG, I marked it from the daily time frame. So let's use DIFVG. So this DIFVG now just means that it's from the daily time frame, daily inversion fair value gap. So you see how once price broke below this bullish fair value gap, remember once upon a time this inversion fair value gap was a bullish fair value gap, it broke below it, and since then, since it broke below that, price has just been staying below this inversion fair value gap. So if you had seen this as your area of resistance, right, you had seen this as your area of resistance, price after the this candlestick closed below here, you see how price traded to that and dropped significantly and dropped to a sell side liquidity. I don't know if you get that. So all what I'm trying to illustrate in those long statements is that fair value gaps, inversion fair value gaps, other blocks, they are institutional support and resistance level, more like the original support and resistance. The original support and resistance. Okay. I think people are still having issues coming in. You guys hear me clearly? Just comment if you can hear me. Let me see your comment. So now we have this close candlestick trade below here. We have this candlestick trade below this supposed bullish fair value gap, now our inversion fair value gap. So at this point, there is nothing making you look at price going to the buy side immediately at this point. So this like more like a study what price did at this fair value gap that was disrespected, this bullish fair value gap that was disrespected. So for you to get the whole point about inversion fair value gap, it's as simple as any bullish fair value gap or bearish fair value gap that was disrespected, it will act the opposite of what it truly is. Okay, so we have now a bearish fair value gap here. We have a bearish fair value gap here at this point. So now at this bearish fair value gap, have you seen how price is really staying in it? Okay, have you seen it? So now this is your inversion, your bearish fair value gap from the 4 hours time frame. So I'll annotate that 4HR capital FVG. Now it is good we annotate our charts like this, because the benefits are: number one, once you get to the lower time frame that is not where you annotated or got the original PD arrays from, it gets confusing if you do not label what it is and which time frame you got it from. Okay, and number two, it helps it gives you that experience and that feel for where price is and what might likely happen there, and we try to look at it from a higher time frame perspective. So now we have price stay here after this serious displacement to the downside and came back to this bearish fair value gap, traded right back to it. So just at this point here where price, you see this candle close below here, this can be somebody's model. So now for the guy asking I should teach CRT, now we can, for you that's looking for CRT here, so see, just look at this is a candle here at this point, this candle at this point here, just at this high would be a buy side liquidity in the lower time frame. So if we mark this high here, so let's call this now our turtle soup. So let's say TS. Turtle soup, have you seen this? Broke below this bullish fair value gap, traded right back to it. So just at this point now, this here, these two consecutive candle down, up close candle, that's the other block. So if we go to the 1 hour time frame, we'll see this turtle soup clearly. But you see, just after it took out that high, which is this turtle soup here, is a buy side liquidity. You will see that in the 1 hour time frame. So after taking that buy side liquidity, if you want to engage in this, you wait for a serious displacement to the downside, and another confirmation would be that it stayed below the bullish, it traded below the bullish fair value gap instead of holding as a bullish fair side. It broke below it, closed below it. So now you can consider this to be a bearish fair value gap, just right here at this point. Can consider this to be a bearish for fair value gap. So we mark out bearish 4 hours FVG. So that would be 4HR FVG. So we mark that out. And now this, I don't remember what I said about liquidity are just swing points, turning points, those areas that retail traders will consider as support and resistance. So in this case here, retail traders will be considering this point here as support. They want to see that as support, so we consider that sell side liquidity, because price will trade to that and it will break through that and hurt them. So we want to also know who is getting hot. So this right here now is a sell side liquidity. So let's annotate so we remember where we got it from. So this sell side liquidity, we got it from the 4 hours time frame, so we don't forget. Now for those of you that joined my live stream, those of you that joined the live stream from I think 23rd of this month, you saw what I was anticipating and you saw it play out live just as I anticipated it, right? This was just how I did it. No complex logic. So somebody is asking forex planner, place do you place your trades on the 4 hours time frame? Yes. Yes, I place my trades on the 4 hours time frame. Alright, so we are making more emphasis, Victor. We are getting there, right? We are getting there. So now I was just at saying that this year I think the comment section is quite distracting. I'm not going to go there anymore till I'm done with what I want, the point I want to make for you guys, right? I think that would be more favorable. So once you see a high taken, you wait for a serious displacement to the downside. Once you get that serious displacement to the downside that have taken out a low, this low here, and you see a bullish fair value gap that have been disrespected. Now, a bullish fair value gap that have been disrespected validates a shift in market structure for you. So you cannot just go in and just choose your shift in market structure, and for you to have that quick displacement to the downside, which is showing you price showing you its leg where it's going to go to. For you to have that serious displacement to the downside, you need to have a fair value gap in this case here, just as you've seen. So this fair value gap is formed as a result of price expanding so quickly to the downside. So you see that there is a rush in order flow to the downside just after taking the buy side. So now I want you to notice something here. So I'll take out this fair value gap now, but have it at the back of your mind that this is a bearish fair value gap just right here. So I want to show you that buy side liquidity taken, this turtle soup here, I picked it from the 4 hours time frame. Right, turtle soup here is still ICT's concept. CRT is just a repackaged name. So we have this bullish bearish order block here, these two consecutive up close candle. Now see how it respected it from here. So that's a bearish order block. So you see how we have this quick expansion, then the next one was a retracement to the upside to this bearish order block. Then just after that, you see where it traded to sell side liquidity. And just at this bearish order block, you see this up close candle here. That's a breaker block. That's a breaker, but I don't want to go too deep into that. But for the sake of study tonight, let's just annotate this. So this breaker is from the 4 hours. So you can make your executions right here. Can wait for it to trade. When you've seen this quick expansion to the downside, and note this in the 4 hours time frame. This in the 4 hours time frame. So price is the same in all time frames. So once it traded to this breaker, and we also have other block here, and you've seen that we've taken out a high, which is a turtle soup. That validates that price is going to the downside. So now I'll give you two key points, 2 to 3 key points. Number one, what validates your other block is that it has taken out, it has offsetted a high or a low. In this case here, what validates this other block as is that it offsets this high here. We'll see the high very clearly once we go to the lower time frame. That's what validates it. And now what validates Another one, what validates a fair value gap 2 for entry is that it has also taken out a high or offset a high or a low. So in this case, for this fair value gap to hold, you see that it has offset this right here. So if you even want to use this time frame just for your entry, you can use this, or let's say you use the other block. Let me show you how your entry will look like. Your entry will look like this, the breaker at this point, because you'll be waiting for it to trade to this breaker or other block. So once it gets to that point, this is how it will look like, and your stop loss will just be at this high. Now for those of you that are quick to see this is just the 2022 model playing out in the 4 hours time frame. How about that? So this can be your entry right here, but for now that's not the point. Let's go to the lower time frame to see what really happened. So now we can go to the 1 hour time frame, so we'll get clearer what that turtle soup is. So now have you seen that this was a high here just in the 1 hour time frame? So have you seen it here? Just at this point here, this is a high. Now let me go to the 30 minutes quickly so you see something too. So have you seen it here? This is a high. So now what is this at this point? You try, just crack your brain around it. Every trading day is another puzzle to solve. I suppose that every time on my Facebook timeline. So this is a buy side liquidity here. So you see, once it offsetted this buy side liquidity, the next it went for was a sell side liquidity after trading up to this point, which we had our breaker right here from the 4 hours time frame. So let me go to the 4 hours at this mark and other block so you can see that pretty clearly. So let's mark that other block here. Now the 1 hour time frame, let's see what we have. So you see, we traded to this point here, and now at this point here, you see this fair value gap here, this buy side that was offsetted. Once it offsetted this buy side, traded seriously to the downside, you wait for it to retrace right to any fair value gap you have at all. But in this case, we had a 4 hours bearish fair value gap here, and we also had a 4 hours other block right here. And if you check very closely, this here is called the reclaim fair value gap, but we are not going into that for now. So we see how it traded to this point is a bearish fair value gap. So let me annotate that. I'll see FVG. So that's a reclaim fair value gap at this point from the 1 hour time frame. So it traded to that bearish order block, and a target still remains the sell side liquidity. You see that precision. But still, if you wanted to get in at this point and you want to have a more refined, let's say, stop loss, you can take your execution right here, remove that the reclaim fair value gap, then you keep your stop loss above this fair value gap here, then your TP, your take profit, can be just at this first a minor sell side for this time frame, and we also have a sell side liquidity right here. So I'll be showing you that once price offset a sell side liquidity or buy side liquidity, there is always a reversal. Right, so your job is just to scout through time frames to see how the reversal will happen. So now we have this sell side liquidity right here too. So if this was your entry from here, it will look like this. I just trust you guys are getting the point. And now we can go to the 30-minute time frame to see this more clearly. So you see how it traded to this point and dropped significantly. And dropped significantly. And now let's look at our turtle soup. You've seen how it also offsetted this high here. So for the CRT guys, this will be your candle range in the 4 hours. This will be your candle range. Let's see the 4 hours time frame. This here, this particular candle here, that will be your candle range. But you don't really need that. Just go to your time frame, try to from this candle to this candle, this the low of this candle to this, that will be your candle range. But you don't need that. You just need to be able to identify buy side liquidity, sell side liquidity. You wait for one to get upsetted, then you trade inside it. So you're not trying to pick tops and bottom in the beginning. So you're not trying to pick a sell at this high. For the model I'm showing you now, you're not trying to pick a sell at this high, and you're not trying to pick a buy at this low. Okay, you're not trying to do that. You try to pick it just in between when you're sure of who is getting hot. So at this point, you know that it is the breakout traders that will be getting hot at this point. So you want to take, after the serious displacement, you've seen that the people that are buying at this point in a whole lot of pains. So now you can take the sell from this bearish fair value gap here to this sell side liquidity. So let's go to the 30-minute time frame. I think I'll stop there, then I'll tell you what I'm looking at for the week. If you have any question, you can ask in the comment. I'm looking at the comments for questions now. You can ask questions now. So just in the 30-minute time frame, this is the price action here. We traded to this year, which we have our order block, and reversed significantly. And one key observation, what you should observe is that you don't see the candlestick's body closing above it. It's still below. So 15 minutes. So now in the 15-minute time frame is quite very beautiful. If you want to do this, you're still right. See, once it upsets a buy side liquidity here, I'm showing the example now. Once it upsets a buy side liquidity right here, this is a buy side liquidity. So now let's call this our turtle soup. Yes, we can call that our turtle soup. That's a sweep, liquidity sweep now. Then you see we have quick expansion to the downside. We've seen this quick expansion to the downside, taking out this low. So even after building a bearish bias right from the higher time frame, taking out this low, so we have this now to be our bearish fair value gap. You see, all this not scripted. I did it live here with you. Then now this is a minor sell side liquidity, which you should always take your profit at every sell side liquidity. This too is a sell side liquidity too. So don't worry. This week I'm going to do it live here on YouTube. I'm going to do it live here on YouTube, so you see how it goes. Like I'll do it. I'll trade and read it live, and you see how it will look like. So this is a bearish fair value gap here, and just after taking